when there is a move in the market, there are two types of moves. The one is like a technical moves and the other one is like a fundamental move. So today was a fundamental move. The reason behind, like you and me, everyone knows, like there was an event in the market. So when the events are there, the moves will be fundamentally, because whenever the things are happening, whenever any interest rates hike or any budget news or any Fed news, so whenever the news are coming, the market has to aggressively reprice either side, on the both side, on the upper side or a downside. So when we have a fundamental news, so the fundamentals doesn't care the technicals, they don't even respect the technicals, because at the time the big time frame players, they have to aggressively reprice their positions, so they don't damn care the technicals at the time. So today, that is the reason why I was mentioning you repeatedly, like you just need to hold only one lot itself, not more than that. And as you can notice, like there was a too much of volatility at some point of the time. Just a second. So from the morning there wasn't a volatility, but at some point of the time you can notice like there was too much of a volatility, and a good amount of a big orders has been also traded at this point. So this was my confirmation. Whenever I see this kind of things, like I put big size, but the stop loss was really big. I said you to enter at 310 and the stop loss was like 250 60 points of a stop. So that was the reason why I said you to enter only one lot. So some of my students, they got misconfused, and they took a big size, and when I asked them to exit from the positions, like they exited at wrong time, and they had a loss. But nevertheless, like in coming days, we are definitely going to make the profit in coming days. So and later, the students who have been following for me for so long time, like they were sitting in the trade and they put the stop loss whatever I said. For the freshers, I said like just to take the only one lot, but if you're following me for so long time, so you can put the stop loss and you can take the risk. A safe trader is the one who doesn't want to give the stop loss. So for them, I said to exit from the market, and for the risky traders, I asked them to sit in the market, because like 250 was the stop loss and you can sit up until 250, and my target was like it wasn't changing. My target was not changing, as I've seen, like when I saw like this kind of a volume. So it is like damn sure the market is going to go high, because whenever the buyer is coming and buying at a higher and higher prices, so definitely it's not going to stop the market. It should be a very very aggressive move. So that was the reason, and some people lost the money and some people they made the money. But anyways, like I don't want to keep the confusion, so I didn't give you any more calls today. And I knew the other move as well, and I gave only for the students who were at my paid channel, and I said them to sell the options itself, and they made the good profit in this move. And rest you can notice like it was completely a sideways range. So nothing much was happening today except this move, and this move was very aggressive. This kind of moves we require to increase our option premiums aggressively, and this kind of move will also increase, but not so fast, because it depends on the time and what time the prices are increasing. So well, this why this kind of moves happens, why this kind of a fundamental news, why the market will react. So we'll dealt very exclusively in our classes, and we'll even deal like how to identify the stop losses and how to identify the short covering in the market, and how aggressively the market will move on either side when there is an event in the market on particular day. It might be a like fixed event, or it might be unfixed event. So that is also been dealt very exclusively in our classes. Well, we'll go into the subject like so tomorrow what we can expect from the market. As you can notice, like 34,800 has respected multiple times, so it can't hold for a longer time if the market is opening flat. But at the same time, you need to look at the global markets as well. Why global markets? I'll just take you at a global markets as well. So in a daily time frame, I'm looking like the Dow Jones. It is looking way much strong compared to our Nifty and Bank Nifty. As you can notice, like the market was aggressively went up, and there was a little bit of a profit booking, and there was an accumulation, which we call it as a pocket positioning. So once the pocket positioning has been happened, like the market can aggressively go on the higher side, and we might even see up until 34,000 as well if the market if there is a breakout above these levels. If the market comes below in this range, So we might see like flat opening or a gap down opening or something like that, but above this thing, like we can see the our markets will be opening somewhere like 16,500, and you can sit the market up until 315. It might be aggressive rally on the one side direction tomorrow. So what we can expect from in our markets, first we'll analyze the bank nifty and then we'll go into the nifty. So I'll take you at a 5 minutes time frame. So definitely like 34,800 has tested multiple times. So below 34,800 will be definitely looking to buy the market if the market opens flat. And if it crosses 34,800, definitely will be looking to sell the market, and 34,500 should be your first target, and 34,200 should be your second target. So if the market is opening above 35,400, definitely will be looking to buy the market, because there are a lot many positions will be created here. These positions will be winded off and the market will go very aggressively on the opposite direction. And the first target will be like 36,000 and 36,500 also we can see tomorrow itself. Like there will be a 1,000 points rally on the upper side. What if the market opens flat and if it goes on the higher side? Better avoid, because 35,200 you will find a multiple resistance. Whenever the price is going close to 35,200, will definitely look to sell the market itself, because 35,000 might act as a key resistance, and 35,400 will act as a second key resistance. So 34,000. So if the market crosses above 34,000, again we'll be having a 35,400. So it might make a volatile move in this range, and options premium might expire, and we won't be getting good trade opportunity for trading tomorrow. So only flat opens, and if the gap down, or if there is a gap down in the market, and if the market starts to flush at the downside, we'll be having these two targets. So if there is a gap up, as I mentioned you, gap up above 35,400 itself, it will be a good gap up. 100 200 points of a gap up, again it will make a volatile move in the range itself. It won't go anywhere. So better to avoid tomorrow, as expiry, the premiums might decay very soon. So stay away from the market. If any trade comes, I'll definitely let you know in my Telegram channel. So let's see in the Nifty. Like before that, I'll just take you at a order flow chart. As you can notice, like 478,000 contracts has been sold into the market. That means like there is a seller in the market. There's no debate. There is no nothing. Like we just need to see whether there is a seller. Yes, there is a seller, and he's kept selling the market. And I was interested only below like 16,340 below, and 16,340 below it got sold into, but immediately it got bought into, and all the stop losses got triggered, and market again flushed on the downside at a second half. So nothing much was happening. It was just a stop losses got triggered, and the market came all the way wherever it was. So below 16,340 will be definitely looking to sell the market. I would say like sit for at least 16,300. So 16,300 will be definitely looking to sell the market, and only buying I would recommend like 16,450 will be looking to buy the market. Up until then, please don't enter aggressively, as there are multiple resistances to the market, and the big time frame players, they don't move the market aggressively. So as you can notice, like 16,500 there is a good amount of a resistance. So 16,450, let it cross and let the price hold, then we'll be definitely looking to buy, because on the higher side we'll be having a target up until 16,700 and 16,800 as well tomorrow itself. We'll see where the market will open. If it is opening a gap down, and if it is flushing down, will add very little quantity, because the people one who shorted here, these people will come and try to book the profit immediately. So the market might go on the other direction. So I've explained all the scenarios for you. So an apologies, like if you lost the money because of the confusion. So from tomorrow and after tomorrow, we'll be like clearly we'll be trading the market. Thank you so much.